The market's absolutely dumped on Friday. And today we got about half of it back. But in this video, I'm going to be talking to you why I believe that this could all be a fake out. We're going to go through my technical analysis on what I actually see based on my indicators and my high five algo suite and what I'm seeing and what the charts are kind of telling me could happen. Now, I want to caveat this with I didn't sell out of, and I'm not selling out of any of my investments. I'm not selling out of Oscar. I'm not timing the markets. I'm not doing any of that. Simply, I said last week on last Tuesday that I sold out of 70% of my trades, continue to trim the rest of my trades the rest of that week, and then fully sold out of the other like 5 or 10% of my trades on Friday when we were down, 1%, 2% in the morning. The reason I did that, I'm going to explain in this video. I'm going to explain why I hold 0 trades right now, but I'm still not selling out of my investments. I want to make that very, very clear. I'm holding all my investments. Even if we drop 20, 30% in the markets, I'm not selling out of my long term investments. But I am full cash, have tons of cash in my trades and in my investment portfolios. I have up to 30% in cash ready to deploy if this market does want to do what my algos are kind of hinting at and warning at what could happen. So let's just get into it, guys. This is going to be a very technical heavy video. If you're into that, great. If you're not, then this probably isn't the video for you. Leave me a subscribe and come back and catch another video where I talk about due diligence and investing and fundamentals and all that good jazz. If you want to learn something new, maybe, then definitely stick around and we'll talk about this. So, a lot of people are, basically calling me a bear at this point, saying, Ronnie, why are you so bearish? Like, we need you to be a bull again. Like, please come back and be a bull. Um, and I wouldn't say I'm bearish. I would say I'm just cautious. I'm cautious and I'm skeptical of what I'm seeing here. And what exactly am I seeing here? Well, first, before we get into what I'm seeing with everything, I want to first explain to you how I trade the markets. So, if you were swimming, right? If you found a heavy creek and you were trying to go swimming in the creek, would it be easier to swim upstream or downstream? Obviously, it would be easier to swim upstream. It would not be easier to swim downstream. Sorry. Oh my gosh, I just messed that up because I was doing something. It would be easier to swim downstream with the current, with the grain, instead of upstream going against the current, going against the grain. And when I think about trading, I think about the exact same thing. When I'm getting into my long trades, right? Because I mainly go long in this market. I really don't short that much unless we have a clear downtrend and a clear sign that okay, we're going to continue down, 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 down. Even then, I don't short that much. Why? Because the market overall goes up way more than it goes down. So already you're at a disadvantage with shorting. Shorting is kind of like going to the casino and expecting to win. You're already at a disadvantage when you walk in the door. Okay. Now, swimming with the stream and swimming and going with the grain is the best way for me to have the best risk to reward when I'm getting into individual trades, right? And so we can clearly see on the chart before we get into anything else with all of these arrows, this is the time that I want to be swimming with the current. I want to be swimming downstream, going with the water, not swimming upstream against the water. Does that make sense? I want to be going with the grain, not against the grain. You see that? When the markets are heading down and we're trying to go long, we're going against the grain. Markets down, trying to go long, we're going against the grain. But when the markets are going higher and we are trading hot. We're taking bullish setups in trades. We're going with the grain, with the grain, with the grain, and for the since April, we're going with the grain. Now, it doesn't take a mathematician. All you really need to know is 2 plus 2 equals 4. 2 plus 2 equals 4, right? 2 plus 2 equals 4. Going bullish and going trading with this direction is bullish, and it gives you a higher probability of winning. Now, we add in some things here, right? So that's like the very basics of it. When I'm trading long setups, I want the overall markets, the QQQ, the SPY, the IWM, I want them to be going bullish, I want them to be going up, and I want it to be clear. I want it to be clear as day. Like this from October 2023 until April 2024, clearly bullish. Same thing here from April 2024 to July 2024. Same here from August 2024 until December 2024. And same thing here from April lows up to current price. Now we're going to add one thing at a time, okay? So first, we're going to add my high five temperature. Now, big shout out to Celso, one of my community members from Australia. Has become a really good friend of mine. He's been in the High Five Collective since its birth in the beginning of January. He's been following me, since the beginning, honestly, and we've became very very good friends. And he really understands my trading logic, my investing logic. He understands, what I'm trying to do with my strategies. And he actually created this high five temperature indicator. I've created everything else, and we've combined to create this high five algo suite, which we believe is very, very key for helping us react to markets and make sure we're positioned properly. So big shout out to him for helping build this. And if you want to jump in and come on in the High Five Collective, I'll link that link down below. We have over 200 members at this time. We do trade alerts. We have courses. We have the High Five Algo Suite. If you want access to that, we got it all. So if you want access to that, you can jump in there in the description below. But so what I want to talk about here, the next part is this high five temperature. Again, it doesn't take a mathematician to realize that you have this zero line, right? Think of like the MACD. Let me try to enhance this to, let's do, I don't even know. Let's do that, I guess. You have this zero line, right? And the zero line is essentially above the zero line is bullish, below the zero line is bearish, right? Very, very simple. So if I were to ask you, if I told you, hey, go through this and I want you to go with the grain, I want you to trade with the grain, not against the grain. You're simply going to go in here and you're going to say, okay, well, this is clearly bearish. This is clearly bullish. This is going with the grain if I'm trading bullish. This is bearish. This is bullish. This is bearish. This is bullish. This is bearish. This is bullish, right? Very, very simple. Very, very simple. And stick around, guys. We're going to get into where we currently are at in the markets right now and why I'm not in any trades. We are going to get to that. I'm just building it up and trying to teach you. I'm trying to get you to understand where I'm at in my thought process of trading. So clearly, this was bearish, right? We dropped almost 12% in the market when we went below the zero line, stayed there, and then we finally curled back up. Then once we flipped back above the zero line, we went on a run from, we'll just say here, once we actually flipped the zero line, we went on a run from here all the way up to there for 15%. And then we did the same thing here from there to there for about 9%. And then here we went from there to the high for another almost 10%. And then finally we went from April here all the way up to current of 16%. So 15%, 10%, 10%, 16%. That is the time that we're above the zero line and that I'm going long this market. I'm very bullish this market and I'm getting in lots and lots of trades and I'm not worried about the market taking a huge dump on me, right? And going against me. Even more so, I'm okay, once we start getting this, we get this peak and then we start curling back up and then we start fast approaching that zero line, you can start getting in there as well, right? You can do it here, you can do it here. You saw we did it there, right? And you're simply saying, okay, we're approaching the zero line. Now I can start getting bullish, approaching the zero line, going to flip here soon, going to flip here soon, going to flip here soon, bullish, bullish, bullish. And you only get a couple fake outs here and there. You got fake out there before the big drop in from the April tariffs, right? And so then once you realize, okay, we're simply just following the trend and momentum, and that is when we want to trade. So we want to trade with this grain. Well, to help us figure out this grain is the right grain and we're continuing higher and bullish, we can easily just see the temperature down here. And the temperature just tells us, okay, we're good here, good here, good here, good here. And that's where the arrows come from. One more thing we can add in is the high five flow. The high five flow is more so a volume indicator. It's a volume momentum indicator. And with this, you can clearly see that, again, below the zero line, we are bearish. Above the zero line, we're bullish. So when we're going from green, stair stepping down, and then flipping to red, you can see that with the temperature, that aligns. And then with the stock price, what happens? It goes down. So all 12% move down. Same thing here, going down, flip to bearishness, flip to bearishness. We had a 8% pullback. Flip to bearishness, past the zero line. We had a 16% pullback. Flip to bearishness, stayed under the zero line, stayed under the zero line. It didn't get real bad until here. But this one back in April, this one told us distinctly in December 2024 into January 2025 that guess what? We are bearish. Guess what? It told us December into January that we are bearish, that this market is not to be trusted, and you should have been sitting out from the end of 2024 until honestly until May 12th, right? You should have been sitting out, or at least April 14th, April 21st, April 28th, May 5th, etc. Right? So just imagine this for a minute, okay? Imagine you're in my shoes right now and people are saying you're a bear. Even though I just did 35% gain in the last month, I locked in over $100,000 in profit, realized gains in my trading portfolio. We took it from 250,000 all the way up to $370,000 in just the last month. And then I went and sold out of all my trades because of what I'm going to get into and what I'm kind of leading up to in this video. In what world would I be sitting here watching the markets, rip today over 2%, over 1% in the SPY and like almost 3% on IWM, even though they were down, almost, 3, 4, 5%, depending on the time you're looking at them on Friday. In what world am I sitting here saying, oh man, like I'm just missing out. I'm missing out. Oh my gosh, I can't believe I can't believe I sold out of my trades. Even though a lot of them are still down compared to, after they're still down after this big move up because we had a bigger move down Friday. In what world am I sitting here after doing what I just did 35% in the last month in my trades and sitting there saying, okay, well, now we're getting very cautious signals. We're getting warning in the markets. And I'm sitting here saying, oh my gosh, like I can't believe I'm not in these trades. Like some things are moving 20%, blah, blah, blah. I'm still in my investments. So my investments are doing good today, like Oscar and FLNC and some other companies. They're still doing really, really good today. So I'm still invested in the market. I'm simply just not trading anything because my philosophy with trading is I'm going to win a lot more if I go with the grain instead of against the grain. Right now, we are starting to get the beginnings of against the grain. Right now, I feel like I'm trading against the grain. I don't care that the market's up 2, 3% today. I don't care if it was up 5% today. I'm following my strategy that has consistently been accurate. It's not 100%, but it's consistently been accurate in helping me understand where the grain is. Right now, the grain is bearish, right? From April lows up until last week, basically the grain has been very bullish. So I'm sitting here, right? And you look to this time frame where we consolidated and then had the big fall. Well, right here, we had this flip from December into January. We had this flip of bearishness. Then you would have sat there for a couple months. You would have sat there for, basically almost 2 months. You would have sat there and people would have been like, "Oh man, you're a bear. I can't believe you're not in these trades." Even though we really didn't go anywhere. We just kind of chopped sideways. Maybe, yeah, obviously some stocks are going to be doing well and those trades are going to be doing well. But you're sitting there and you take a cautious approach and you're sitting there for a couple months and you're not in any trades. Would you rather take 2 months of not being in any trades and then understand what happened with the big crash of 25% and getting absolutely destroyed on your trades, but that wouldn't happen if you were just following the strategy and being patient for 2 months? I know it's really hard for a lot of people. They without putting on a trade for 2 months, it would kill them. Now, again, I'm still day trading at this time. I'm not completely not trading at all. I didn't day trade really anything today because whenever you have a big gap up day like we had today, day trading is very, very difficult. The move was already priced in before the markets even opened. So typically you're not going to get the big move priced in and then you're going to get even more move. Like typically it's going to be, it's very difficult. And I also trade based off momentum and these indicators. So now kind of putting all this together, right? Let's put all this together. So one, in my philosophy of trading is I want to trade with the grain. So from here to here, we were with the grain. Here to here, we were with the grain. Here to here, we were with the grain. And then since April, we've been with the grain. Now let's really fast forward to where we are at right now. Where we are at right now is the grain is not with us. We have now crossed with the temperature below the zero line, right? We have consistently shown that even though the grain is continuing to rise, prices are continuing to rise, the QQQs continue to go higher. We've consistently shown during this time that breadth and momentum is petering out, petering out, petering out, petering out. With the temperature and momentum there, it has been petering out, petering out, petering out, petering out. And now, even though we're up big today, and again, remember, we were down more on Friday than we were up today, we have flipped the zero line to complete bearish. Now, just to put this in perspective, these red dotted lines, get rid of all this stuff. Let's zoom out here. Okay. Since 2021, every single time that this high five temperature, every single time that we have went from over the zero line to under the zero line, besides one time, it has been so accurate in telling us at least 8% pullback in the QQQ. September 13th, 2021, we flipped here. And this one's funny because we flipped here, we went down 8%, and then so we got the 8% move. Then we snapped back up like 15% to a high of 410, but we stayed under the zero line. So we went down and then we snapped back up. And then during this time, you would have been sitting there like, oh my gosh, price is just going higher, higher, higher. But we never went back above the zero line. So you'd be sitting there saying, well, I'm just going to sit out for these couple months because I don't trust this. And then what happened? The bear market of 2022 happened and people got absolutely wrecked, especially if you're in trades and you're holding and you're like, okay, it's going to bounce. It bounces. Okay, we're good. We're back. Let me get into more trades. Oh man. Oh man. Oh man. Okay, it bounced. We're back. I'm finally gonna get my money back. Oh man. Uh oh. Okay. Ouch. And then you eventually exit somewhere in here with your trades because trading is dating, trading is speed dating, investing is marriage. Okay. Don't forget that. It's very, very important. Marriage is for the long term, trading is only for the short term, and you should not be holding a freaking trade through a bear market. You should not be holding a trade through a 5% drawdown in the overall markets. That just doesn't make any sense. So here, December 20 or September 13th, 2021 gave us a leading indicator of what was going to happen with this bear market. It told us, it said, hey, things aren't okay. We've had this huge run. Things are not okay. We're giving you this early warning. Then we saw an 8% move down. Then we saw a big fake out to the upside. Then we saw the real move. Okay. Then we fast forward to September 19, 2022. You flipped to red again, but this time you had only a small move. So this one would not have been accurate. Let's say this one would not have been accurate. But at the same time, you were down from 408 all the way down to 255. So this right here, you have to understand that you have already ran down so much. So obviously, when we flip back down to zero, you kind of have to take it and you're not going to sit there and be like, yeah, I'm going to short this market. We're going to go down so much more. At that time, guys, we had already been down 38%. So again, you just have to take that into consideration. Yes, this was a false one, right? So of course it's not 100%, but let's just go through it quickly. This one led to an 8% pullback. This time led to a 12% pullback. This time led to another 8% pullback. This time led to a 16% pullback. This time in April led to a 25% correction. And here we are now in the market and the high five temperatures clearly telling you we flipped to zero. We flipped to below negative zero. We flipped there. We're there. It's not good. This is what it is. We're below negative zero. So you have to ask yourself as a trader, not as an investor. Well, you can ask yourself as an investor too, because here's what I'm doing with this information. I'm not sitting here running out the door to buy. I wasn't sitting there running out the door to buy the dip on Friday because this is clearly telling me that we have more to go and we're closer to a top than we are to a new bull market starting. Look how much we've ran here to here. Okay. And then we had a big bear market here to here. Then we had a big pullback here to here. Then we had a big pullback here to here. Then we had a big pullback here to here. We have this gap. We have this gap to fill down here to 492.70. And that'd be 20% peak to trough. And we have to also think about 2018. Things look very, very similar to 2018. And the QQQ from October to December went down like 23% in 2018 as well. So I'm just saying, I don't know this is 100% going to happen. There has been a fake out, but you have to realize the one fake out in the last 4 or 5 years came at the bottom of the bear market of 2022. So 1, 2, 3, 4, 5, 6, 7. 7 times in the last 5 to 6 years, out of the last 4 to 5 years, we've gotten a move below the zero line. Okay. Oh, I know I'm pretty. I'm not that pretty. Out of the last 4 or 5 years, we've gotten a move below the zero line 7 times. Out of those 7 times, this has only been wrong 1 time. And the only time it was wrong was not at the top. It was wrong at the bottom of a bear market. Could it be wrong again here? Could this be a fake out? Of course it could. I'm simply sitting here as a probabilities guy, as a math guy, as a guy that just made 35% in 1 month and made over 100 and some $1,000 in 1 month, knowing the taxes are right around the corner. And I'm simply sitting here saying, why on earth would I get into any trade right now? Why on earth would I sit here, and I don't care if the market's up 2% or 5%, why on earth would I have those stats and that probability that most likely that's going to happen again? It might not be this week, it might not be next week, it might be in 2 months from now. But why on earth am I going to sit there and trade like everything's okay and trade against the grain? Why on earth am I going to do that? And you can you can buy into what I'm saying here, you can not buy into what I'm saying here. I don't really care, because at the end of the day, I'm playing my money, I'm playing my portfolios, I'm playing my strategies, right? I'm not posting bullish setups. I'm not posting trades. I'm not posting anything, because it's truly not what I'm doing. When I was posting trades, when I was posting bullish setups, when I was posting all of those things, it's because it was actually what I was playing. It was actually what I was doing. And in the High Five Collective, I was posting all of my trades, all my trade alerts, all my trade breakdowns, why I'm getting into them, what are my stop losses, what are my profit targets, all of that. But individual stocks are one thing, and I will trade those only when the grain is the same direction. If I'm trading bullish, the grain of the overall markets needs to be bullish. Why would I trade names? It's like I always say, never short in a bull market. So if we're going, like, if the grain is going higher, 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 why would I be going against the grain and shorting? That's just dumb to me. Why? Because Palantir's overvalued. Everybody knows Palantir's overvalued. Okay. You don't just short because you feel like it. I do everything because of technical analysis. And I am a strong believer that technical analysis and the charts are leading indicators, leading us before the news actually comes. People are sitting here and they have it all wrong. They're sitting here saying, oh, well, because of the tweet that Trump made about China, that is the reason that the market blew up on Friday. Is it part of the reason? Yes, that is undeniable. But is it the only reason? No, it is not the only reason. What Trump did, the Trump tweet, was a spark in a room full of gas. And when you have a spark in a room full of gas, it blows up. The whole house blows up. The gas is the fact that the government has been shut down 12 days. The economic data that's been coming out that hasn't been so great. The housing market that doesn't look so great down south. Homes are dropping in price like crazy. People are strapped for cash. People aren't spending as much. XYZ economic data, blah, blah, blah. It's all, I always say it's all noise, right? And it truly is. It's all a bunch of small little details in the whole entire piece of the pie, right? Just a whole bunch of small little ingredients in the overall pie. What I really care about is the overall direction of the market. Again, I'm still in my investments. I'm still bullish on them for the long term. But I understand that if this market, because of what I'm seeing here, takes a crap, everything's coming down with it. Oscar, Zeta, all of it. It doesn't matter how undervalued, doesn't matter what safety stocks, whatever. They're all coming down, some more than others. The ones that have really ran hundreds of percent, the ones that are really overvalued, the ones that have no fundamental that have no revenue to back up their valuation, they're going to get murdered. Murdered. And if you're in them when they're up hundreds of percent and you're just getting into them, or you're in them after they're up 80%, you have to be ready for those stocks when the QQQ, when eventually it does go down 20% again, because guess what? Eventually it will happen. Those stocks are going to be down 40, 50, 60, 70, 80, some 90, some 95, some 99% down. And you are going to lose all of it. Okay. So it's important at this time that I make this video on my technical analysis and why I'm not trading anything. I'm still invested. I'm still holding my investments because I believe in them even through a recession. I believe in them even through the worst times. And just to clarify again, because people do not understand what I'm saying, and even if I literally wrote it down on a piece of paper and put it right in front of their face, they still misconstrue what I'm saying. I'm not saying at a absolute that this market is about to tank. I'm just going off the probabilities, off my strategies and my indicators that over the last 7 times that we've crossed the zero line on the temperature indicator and the flow indicator, we have gone down at least 8% on the QQQ every time but one. So 6 out of the 7 times. I'm a probabilities guy. I care about probabilities. And that probability is a very extreme probability. 6 out of the last 7 times. And that's just me going back to 2021. I can go back farther probably. I just want to keep it relevant. I can go back farther and it's probably this a very similar ratio. So you can do what you want with this information. I'm not telling you to do anything. I got sick of answering the same questions and I got sick of people calling me a bear just because I'm literally being skeptical. And yeah. And at the end of the day, all I'm trying to do is teach. All I'm trying to do in my community is teach and educate and show people that you can be a profitable trader, you can be a profitable investor, and you can change you and your family's life. And that's what I really care about. And that's what I want to continue to do. But don't expect me to just, because I make content on social media and because trust me, I get that nobody like when you're bearish, when you post things against the grain, when you post these things that come off bearish, when everybody's screaming, "Oh my gosh, my portfolio's up so much money. Look how much money I made. Yeah, yeah, yeah." Like that's great. I love that for everybody. I do. I cheer on everybody. Make as much money as you can. That's amazing for you and your family. I don't want you to lose money. And so I come in here with all of this, just simply saying, I'm not trading anything right now because I think the probabilities are a lot higher that we see at least 8%, like we've seen on average every single time that this has happened, then we don't. Then we go another 10% up in the market. Again, I already know that if we keep running in this market, people are going to come at me. Oh my gosh, look at you. You're an idiot, man. Like you're an idiot. You were bearish and look, you missed out on all these gains. I don't care because I made literally, it's crazy. You told me 5, 10, 15, 20, 30 years ago that you will one day make $112,000 realized in a month, 35%. And you just simply have to be cautious when your strategies say be cautious. I would sit there and say deal every single time because I never thought ever, honestly, me as a young person, I never thought I would amount to much at some points in my life. I didn't. I didn't think I'd amount to much. And that was like a self confidence issue with myself that I've overcome in my life. And, just I always like to take. I always like to step back, stay humble, and look at things in perspective. And that amount of money is plenty of money for a year for me and my family to live off of. So for it to happen in a month, and now I'm sitting here just out of my trades. I'm still invested, so I'm still making the gains that you guys are making on this move up in my investments and my long-term investments. But to make that kind of money in trading, it's insane. And I never thought I could do it. But here we are. And I'm not going to throw it all away because the market's showing based on price action that higher, higher, higher. I'm not going to FOMO and chase this after Friday, I believe, was a warning shot to everybody that, hey, things might not be as great as you think. We might not keep running as much as you think. And remember that pullbacks are healthy for this market, in that the PE right now, the overall PE, the average PE of the SP 500 is at the highest point it's been in a very long time. And every time it gets up to that highest point, typically it's led by a big brutalized pullback, correction, crash, bear market, etc. So, look, guys, I'm not trying to be a bear. I wish everybody the best of luck. I want you all to make money. I'm just sitting here telling you what I'm doing, telling you why I'm doing what I'm doing, and just being cautious. If all of this stuff comes down and then flips right back up and curls back up above the zero line, I'm gonna be right back to freaking talking about stocks, to be posting my chart setups, to be posting my trades, my trade alerts in my community. I'm gonna be right back to doing all that and making money going with the grain. But until that happens, I'm gonna sit on my hands. I'm gonna do some day trading. I'm gonna do some research into some investments, maybe buy some investments. But again, not really looking to spend a lot of that up to 30% cash in my investment portfolios because we're still right at all-time highs, guys. We drop 10% in the markets, start deploying more cash. We drop 15, 20, 25, 30%. I'm going to spend all my cash. And then I'm going to find ways to put more cash in my portfolios to spend even more buying stocks, because those are the times that you will make wild money. Those are the times that you're going to make like crazy money buying those dips like we saw in April. That's the time to be really going heavy on the dip buying, not only 3% down from all-time highs, or now only like 1-2% from all-time highs, guys. It can keep running. Yes, we don't know what the market's going to do. I'm not saying I know what the market's going to do. I'm not predicting anything. I'm simply going based off the probabilities that things don't look so great right now. And based on my strategies, this is what I'm doing. I'm sitting on my hands. I hope you enjoyed this video, guys. I really do. I haven't asked anything from you guys. You guys don't have to like the video. You guys don't have to subscribe if you don't want to. But if you do want to, if you do want to support me, if you do want to see more content like this or my investment content or whatever, like, yeah, this was a longer video, 40 minutes, but I think it was a very good in-depth video. I know my community members are really going to like it and going to like the in-depthness of it. And yeah, guys, well, I appreciate it. Hope you guys have a great rest of your week. Yeah, stay safe out there. God bless. Have a good one.